here with top strategist for Casey Research, the most disciplined stock picker according to Doug Casey himself, Marin Katusa. Thank you for joining us.
Hey, it's my pleasure, Dan.
You know, I was at the San Francisco Hard Asset Show in November, and I'm sure you go to all these shows as well. And I couldn't believe how there was nobody showed up. And the biggest news was that last year there was over 200 companies there, and this year there was only 61. And I was actually reading a chart that was actually created a few months ago. It's from October 31st, 2013. So this is actually before the leg down that we just recently had in the metal prices. But it said that 69% of TSX Venture stocks out of 1,286 mining companies, 69% had market caps of less than 5 million, 48% less than 2 million, and 73% had a share price of less than 10 cents. So do we still need to see some big washout where the TSXV is kind of cleared out before we hit the absolute bottom?
Look, it's already starting to wash out, and it'll continue to wash out. In Vancouver, where my head office is, which is one of the Casey Research offices, we have many around the world, but the one that I run is in Vancouver. So I'm in the heart of the junior resource sector. I know all the bankers who are doing the deals, and the reality is the business model of the Vancouver stock market or the Toronto venture, it's broken. The money has stopped flowing. That does not mean that the money to the right companies has stopped flowing. That does not mean that the companies to the right, the money to the right management teams has stopped flowing. But the general money flowing to all sorts of exploration junior companies with an office is down. Give you an even better metric. Right now, I saw where our office is. They came to our office and said, "Hey, Marin, do you want to expand your office?" And I said, "Why? Were the rates low?" And they know that I'm a deal hunter, and I got the cheapest rent in Vancouver by structuring a good deal for our office. And they said, "Marin, we've never in Vancouver for the last 15 years had this much available office rent." And they came out and clearly stated in print. I have a document that says, because of the junior mining shutdowns, there's over 500,000 square feet available in downtown Vancouver for office lease available at a big discount. Do you know what it was a year and a half ago?
What?
Less than 50,000 square feet.
Wow.
So we're there, but this is the beauty of the market. When everybody's broken, you're not going to make a fortune in some company that has no money. The management team has 10 different companies under their belt, and they have a gazillion shares out, and they have some moose pasture. That's not what I'm saying and doing. What I'm saying to do is, in this market, someone who has over $5 million in the bank, who owns probably 10, 15% of the company themselves, the management team are the largest investors themselves, the big smart money's following them, and they can go and consolidate in this broken sector in 3 to 5 years, you're going to make a 10-bagger. Or more. That's how it's done. This is a cyclical market.
Marin, where are you putting your money then right now?
Just recently, Rick Rule and I have participated. And when I say participated, we've put millions into a Toronto stock market venture deal with over 4 million ounces of gold, all above a gram per ton. This is all 43-101. The management team is fantastic. It's someone who's on my Casey Next 10 list. He's a proven builder of mines. It's an Amir Adani and the company called Brazil Resources. The ticker symbol is BRI, and they are doing exactly what Rick Rule and I are talking about, which is a disciplined financial balance sheet, a great management team who's proven. They have the network to go and consolidate more ounces of gold, and that's exactly what they're doing. So that's what we've done recently. That's our most recent investment, and we expect that between 3 to 5 years, this 50-cent stock will, I'm hoping to be a $5 stock.
Does it meet the qualification as far as Amir Adani? Does he own a good portion of the company?
Yes, he does. He actually put $300,000 in his last financing. He is the second largest shareholder in the company, which is great to see. He owns, with management, well over 15%. Rick Rule and my fund, we own about just under 15% also, so we like to match what management put in. So to the formula fits the plan that what we're looking for in these type of deals. Rick also put it in his own fund also, and there's a lot of smart money, experienced money who've gone through all these cycles that participated in the financing with Amir.
Marin, one question that comes to mind is how big of a deal is it that Brazil Resources was able to raise $6.4 million in this environment?
First of all, they wanted to raise $5 million, but the demand was so much higher that they ended up raising about $6.5 million. For a market cap of that size, it's the largest financing of that size and type of company that I've seen in the markets in the last quarter of 2013. So that tells you that it's a very big thing. And when you have some investors like Rick Rule and other shrewd investors who came in, some long-time successful fund managers, that became the hot stock that everybody was trying to get into. Hence why they went from $5 million that they wanted to raise. And just so you know, initially a lot of brokers thought there's no way they're going to raise $5 million. That thing in 24 hours was booked to over $6.5 million, and Amir said, "That's it. We're doing 6.5. I don't want to do any more. I don't need it." He has a plan, and I expect him to consolidate more companies. And it is exactly the perfect time for someone like Amir to execute his business plan. You don't want to buy things when they're trading at a premium to their value. You want to buy them when they're at the biggest sale and when companies are begging you to take their gold from them. Right now, it's the lowest, it's the cheapest company in all of Brazil and South America per 43,101 ounce of gold per market cap. The company has no debt. The management team have put big money into the company, not just in the past, but in this most recent financing. It's a great story. So, yes, that was a huge feat, but I think it's just the beginning of a great story.
Not only for the resource sector, but specifically the precious metals, which a lot of people have been investing in to protect themselves. How is your feeling on the metals and the resource sector in general? Are you still bearish?
Very much so, Dan, but that's the beauty of where we are in the markets. We are coming towards the end of the valley of darkness. And, when people talk about the investments Warren Buffett did or any of these hedge fund managers, it's that lonely trade. It's the trade when you're standing by yourself. And, when I went on national television and told everyone to sell their stocks, I was laughed at by a commentator when I said Canada's largest diversified mining company, Teck, would be, it's 50% overvalued, meaning that it's going to get cut in half. And the anchorman started laughing at me. Well, a year and a half later, they brought me on saying, well, you're right, is the time to buy. And I said, no, it's going to go sideways now. So what you want to do as an investor is find the absolute best management teams that are buying the stock themselves and have the financial acumen. They have the financial statements, a disciplined financial statement, which means they have money, and they can go consolidate the companies that have great assets, but management teams blew up their financial structure, spending all their money developing these assets. And that's exactly how Ross Beatty and Robert Friedland and Lucas Lundin became billionaires in the 90s and early 2000s. This is exactly the type of market where you can add a zero to the end of your portfolio. But it takes discipline. It's a very simple formula, but it takes a lot of courage. No one said it's going to be easy, but you can make a lot of money in exactly this type of market.
As far as people kind of looking at this market with the explorers down, obviously they've been decimated, but then the producers are down, like the high quality producers, the Endeavors and First Majestics, those type of guys of the world. What, at this point, would the average guy be better off just going into a beaten down producer, or do you think they should be in the explorers?
Well, like when you mentioned First Majestic, when they were less than $1, I wrote them up years ago. So Keith Neumeyer, their main guy, and the Duke of Durango, we became very close friends. He's a great guy, and I met his brother on that site, and we all became good friends. At that time, he had less than $1 stock. Then by 2011, it went to $30, and we brought them into the 10-bagger club at KC Research. And it's interesting, at that time when we wrote them up, everyone wondered, oh my God, how are they going to do this? When you talk about a great management team, both financially and geologically, they went after solid assets. But at the time, when I was on the site tour, we went into these mines and we looked at them, and it was because they were chasing these veins underground, it was very difficult to build up a resource at that time. And everyone said, oh my God, they're going to be a high-cost producer, blah, blah, blah. Then they got the price of silver behind them. They went from $1 to $30 within 3 years.
Wow.
That's the type of returns you can get in this market. Now, looking back at it, it was so obvious. There's a book that came out for the holidays called The Frackers, and it's a great story. And yet, if you go to page 384, a company that Casey Research was the first to recommend is in the book about these major successes. But at the time, when you're in the valley of darkness, the right trade is the lonely trade. And it's not an easy trade to do, like the first Majestic recommendation that we did at Casey. So what I'm trying to get at is you have to ask yourself, okay, what is my risk tolerance? What is my time frame? And I think First Majestic is a great company to invest back then and today.
Okay, so
I think you're going to have bigger leverage going with the right exploration company, because First Majestic is not going to go from $10 to $300, whereas a company like BRI, in my opinion, in 3 to 5 years, it will go from 50 cents to $5.
Okay, very good. That's a great example. And as far as the safety, the biggest concern for people is, are you expecting these things to go down even more, or is this kind of like the bottom for the quality juniors?
I do expect that this is a very volatile market, and I don't know if it's going to go down before it goes up, or if it's going to go up and then down and then up again. What we did was, I'll use the BRI example here. We bought it at $1.50, we bought it at $1, we bought it at 50 cents, but I bought a lot more when it came down to this most recent financing, because the story is much better than it was a year ago. Now, the price, as Warren Buffett clearly says many, many times, is just a reflection of what the market believes is today's price. But you look at, what I went through with Copper Mountain. Copper Mountain, when we took it IPO, in the first day it went from $1.45 to over $2.25. Got it up to $2.85, and then we had the big crash in late 08, and it went to just over 30 cents. I bought the stock in the open market at one of the lowest, the lowest price it ever traded was 33 cents in the open market. I bought that stock. Now I'm a director and one of the founding directors of the company. At that point, everyone thought, the company's going to go under, the price of copper's down, the markets are over. Within 3 years, I went on national television and said, if you want to learn how to make 10 times your money, you have to buy companies that nobody cares about today. And Copper Mountain was a perfect example. And it went from 33 cents to over $8 in under 3 years, and today is Canada's third largest producing copper mine. Wow. Okay, we have over 400 guys on site producing copper 24 hours a day, 7 days a week. So what I'm trying to get at is that when you're in the valley of darkness, it could go lower, but that's why you don't put all your money into the stock today. You find the company you really like and buy in tranches. That's what we do, and if it goes lower, and if the story hasn't changed, but in fact got better, we'll actually increase our position and average down.
Marin, as far as the 2014 economy, you travel all over the world. What's your overall outlook for 2014? You think the U.S. is going to continue to kind of have this kind of sluggish growth here, where people aren't getting jobs, but the economy is moving along and the stock market's making new highs?
I'm not smart enough to know where it will go, but what I think, I listen to guys like Bud Conrad and Doug Casey, who are very excellent at specifically this type of question. And what I think, how I positioned our portfolio is to prepare for exactly what you just said. But if there are any surprises on the upside, then make sure you cover yourself in the different situations. But if you're to put a gun at my head and say, what do I think is going to happen? It's exactly the situation you just painted out.
Marin, thank you so much for your time. I hope to have you on the show in a few weeks to talk about energy.
My pleasure, Dan. Thanks a lot, and all the best for 2014.